Most traders overcomplicate everything. They use hundreds and hundreds of different indicators, all kinds of wallet trackers and bubble maps, and there's still no consistency. Making a few $100s every day is possible, but you have to keep things ridiculously simple when it comes to trading. Let me show you how. For the examples today, I'm using Axiom, links in the description and the pinned comments. When you come on to the Pulse section here, you'll see low cap meme coins. So we're going to have a look at a couple of these right now. First thing before we go any further is you need to spot obvious rugs. I have many videos on my channel about this, so if you don't know how to do that, I would suggest after this video going and checking those out first, because no indicators are gonna work on this type of chart. So when you open any of these charts and you come to the top left, you'll see a button that says indicators. So if you click on that, you'll see many different indicators. There's probably at least 50 here or more. And trust me, I've tried all of them. Many years ago, I used to use Ichimoku clouds, stochastics, VWAP, everything. You name it, I've tried it. And especially with lower cap meme coins where momentum is everything, these are the only two you really need to use. So the first one, if you scroll down, is the Relative Strength Index, also known as the RSI. And I'm going to show you how to use this properly. So this is a coin, as an example, that was launched a while ago. It's been at least an hour now. So it's not seconds or minutes. So with these ones, you're looking for more swing trades, where you might be hoping for a move in market cap of several 100,000, rather than a brand new one, for example a coin like this, where you're only looking for a move of like 20,000 in market cap. So the time frames we use change, and this is important for RSI. I see a lot of people using the RSI on a 1 second chart, and this is not the best way to use it. You get very noisy chart there with loads and loads of what we call fake positives. Another term sometimes people use is false positives. So basically what that means is it gives you an indication that it's time to buy or sell all the time. It's constantly flashing the indicator, and that's not what you want. So my recommendation is, if it's lower market cap very early, so it only launched minutes ago, switch to the 5 second when analyzing the RSI, and it smooths out this indicator so you get a more reliable idea. If it's brand new and it only launched kind of seconds ago, then obviously the 1 second is fine to use, but I would drop to the 5 second, and then in one that's been running for at least an hour or so, I would change to the 15 second. Now the key here are these two levels. So the shaded part in between, that's when momentum's kind of at an average. Anything above the top line is overbought. What that means is there's so much buying pressure that the equilibrium has pushed too much in one direction. And these are sometimes early signs that it's time to take some profit off the table or wait for a better time to buy. Don't ape in at the top. And if you actually zoom into this chart, you'll see that it did line up with some local tops here. So we've got a few here. You've got this one here, a smaller one here, a smaller one here, and then we saw a major top here. But notice how it gave you a very early indicator. And the trick with this, and this is a little bit more advanced, but the trick is when it goes into overbought territory, that's not technically like textbook. That's not when you should be selling. That's when you should be on alert. It's when it goes up and then actually turns back down into the shaded area. That's actually the sign to exit. And it works the other way around. If things are oversold, then we get into the bottom, below the bottom shaded area. You're looking for the same thing there. You're looking for any peak below. Now this is not like automatically every time it drops here, it just means you buy, and it drops at the top, it just means you sell. This is a trading indicator that helps you make a decision. Because when you're buying dips, you can just buy them blind. But this is helping you, because what it's saying is don't buy them blind. Like this was a dip, this was a dip, dip here, dip here, dip here. These were all dips, but none of them turned into a profitable trade. And notice on the RSI, we didn't reach oversold. So if you were patient and you waited, the price dropped from 325 all the way up to just above 100. Well, actually it nailed 100 exactly. And I'll come on to that because that's the second most important indicator, and that's support and resistance. And 100K is one of the most important levels. So 10K, 100K, and a million when it comes to trading meme coins. Now, if you go to the left here and you click on where you see the trend line, you can click on horizontal line there and you can find the 100 and you can mark it off like that. You can change the settings to the line if it helps. So you can make it a little bit thicker. You can change the color, Do whatever you want with it. But this is the next point. This is an area we know that's support. But the thing is, when you get an area that's support and you get an oversold indicator, that's two indicators together. And in trading, this is what we call confluence. What it means is you get loads and loads of signs pointing you in the same direction. You have to imagine each trade. I know it might sound a bit complicated, but it's important that you get this in your head. I mean, it took me years to learn all of this stuff, and I wasted a lot of money doing it, to be honest. But every time you take a trade, it's as if you're in a court and you're arguing your side, pros, against the cons of taking the trade. And, rather than just blindly convincing yourself, if you use objective data, rather than just, I feel, my gut saying it might go up like most people do in crypto, that's not how you trade. That's always going to result in losses in the long term. But if you're saying here, well, it's oversold, I can see it's bouncing at 100k support, is otherwise not a rug, and it looks like it could be a decent meme, you've quickly checked socials and stuff like that. And this is a dip buy as well, so we know it's already ran to 300 and not completely rugged. It's going to have pullbacks along the way. It ticks a lot of boxes. And then what's the good thing about the support level? If you're wrong and it drops to 70k, 80k, you're out of the position. Fine. So let's say you put one soul in, you might lose 0.2 soul. But if you're right, from 100, it's many, many multiples. So that's why these are the two key indicators. And I'll show you it on the exact same chart. So when we're talking about support and resistance, there are two things. One is the psychological levels I mentioned. For example, all the way down at 10k is one of the first levels. Then there's another level a lot of people forget to mark on, and that's the migration level. That's really important as well. That can become quite significant support and resistance with low cap meme coins in my experience. 100k, as we mentioned before. And then as you go up, you've got 500k, and then you've got 1 million. So let's mark the million off here. Look where price hit resistance 3 times. It hit resistance there and pulled back. These are very strong levels. These are levels that have been around forever when it comes to crypto coins, especially meme coins. But there are other things that you need to mark off. And the other things are these. So any important price action before in terms of highs and dips, major ones, you can mark those off too. For example, we had one here, which was the previous high at 315. And if you want, we could change the color to that. Why that's important is, let's say we get a larger pullback. Let's say we went clean through it. We kind of did. It was a bit messy, but let's say we just went clean through here and price continues to fall back, and the volume goes down in this particular meme coin, and most of them die off anyway, as you already know, especially if you've been watching my videos. That might be an area where if I see the RSI oversold, I see a wick below here, that might be one where I place an entry. And I can even put an automatic entry because I can go into limit order here and I can prepare a trade there. So if price ever returned there, my trade would be activated, and it's worth it in terms of what we call risk reward, because again, I'm risking just below, so maybe 40,000 in market cap, something like that. So it might be 0.1 or 0.2 soul. This is assuming I have a 1 soul position, and then the reward is, well, potentially I'm aiming for a run back to all-time highs, which again gets less and less likely as these coins get older, but at minimum a 2x, and I would look to take profit automatically at 2x. So 2x from here would be 600, and I would make sure I have my take profit at 590, 580, 590. So we can click on the trending tab here. There's also Surge as well, Dex Screener, etc. I don't tend to use the Surge tab a lot, to be honest with you. Trending is much better, but also I use other things. I use Dex Screener, and you can use other platforms to find trending tokens. But here, I don't really want to look at older coins. So for example, Useless is a much older coin. So if we zoom right out here, you can see it's been doing literally nothing, just going sideways for months now. These are not good coins to trade, because you end up getting stuck holding positions here, but more on that in another video. But basically these longer term coins, the strategies are completely different. So for every new coin, you're doing the same thing, using RSI and basic support and resistance. Those are two of the most important indicators when it comes to trading low cap meme coins. But just remember, your bias with any of these coins, remember, once you've ruled out whether they're a rug or not, is just understand that it's the uptrend. When these coins are still in an uptrend, that's where the probability is in your favor, because obviously we're buying low, selling high to make money. Once it's off a peak, the chance of it doing anything decent in terms of a bounce gets very, very low, especially if the dip is really, really low. So if the dip is more than 50 or 60%, I would say just stay well away. 60, 65% is the absolute maximum when it comes to kind of fib levels. But then after that, for example, this, if it was a legit coin, it ran to 260. So the level here would be about 100k. If it's dropped below 100k, stay well away from it. And most coins, to be honest with you, if they ran above 100k, if they drop back below that so important 100k level, you should move away. There'll be rare ones that dip below, well below, and then still run into the millions. But those are the rarities. And by the way, just before we finish, let's come back to this one, this sombrero one. Look at that. Annoying that I'm doing a video at the same time, otherwise I would have taken a trade here. But basically this, on the 15 second, you can see in the top left, we went into oversold. So that was the indicator here. There's 500k market cap. So it's a nice round number in terms of support. And what did we do from there? We ran. First target is 1 million. But we broke through that this time. We'd already tested it before. And then we pushed through all the way up to where? 1.5 million. That's the next round figure target after that. So a nice 3x trade that would have been. Obviously, you know, taking profits along the way, but still. And by the way, a little bit more advanced, but this is divergence here. So where you get a lower peak, the second peak, but the price is a higher peak, that's a sign of an imminent reversal. So we could actually get potentially a deeper reversal here, but have a look again. We're on the RSI. It's still technically in an early uptrend. It hasn't completely failed. If it had gone down here, then I wouldn't be messing about buying dips and stuff like that. But now we're technically still in an uptrend. So if this gets here, remember, check where previous highs are, check where previous support is, and it's hard to argue against taking another dip trade. Now, you know, it's difficult to know how high these, you know, the meme coins will get, especially lower cap ones nowadays. Like, you don't see many run past 2-3 million, but market conditions have been a little bit better in recent days. So stick to the data, stick to your risk reward. That's all you can do. So if I took a trade here at 1 million and I have my stop at 900,000 below, that's not too bad. Believe it or not, that's actually less risk than buying at 20k market cap and your stop loss being at 16k market cap. If you don't know why, then write these numbers down and work it out. You should know why buying at 20k with my stop loss at 16 is more risk than buying at 1 million with my stop loss 100,000 away at 900k. Hope these tips help. If you have any questions, let me know in the comment section below. Thanks for listening.